Hi, this is Charlie giving you Monday's market commentary. You're only as good as your last trade. It was something that came to my mind this week just gone. I was with a trader on Wednesday, and this trader, he won't mind me mentioning this, but in the past has got a little bit overconfident at times, and as a result had some really bad spells of trading because he would allow himself to get overconfident on a winning spell, and then literally then either over gear himself because he thought that whatever he did he couldn't lose on, or would just over trade for the same reason, just trade and trade and trade because he thought, oh, I can't lose, I've got this lick sort of thing. And so it's always good, a good humbler to always think to yourself, and for some people it's probably good to write on a post-it note, just you're only as good as your last trade, and if you can keep that at the back of your mind, it's probably a good thing, especially when you've just having a good run, because just as you're having a good run, you don't know when you're just about to have a few losing trades, but maybe just around the corner, and it just keeps you humble. Make sure that you keep your risk management under control, and makes you a better trader for it, because we all have losers and we all have losing trades and small losing streaks. It's just a case of how you manage them, and some people won't manage them very well, whereas other people will manage them professionally, and then you come out of them very quickly as well, just as quickly as you went into them. So just remember, you're only as good as your last trade. Right, okay, let's go into the market commentary then, shall we? Oh yeah, Friday's video update. Yeah, I'm managing it. We were at a wedding, and so I just trailed my stops up, and so I posted it on Facebook. I took a screenshot, so I think it ended up like a small win of about 230 odd quid. Which is a bit of a shame because it was up quite nicely, but it wasn't just about where it got up to. If it had run, then it would have been a nice 4-digit winner. But and that's the thing. Again, when it comes to trading, there's that fine line between wanting to grab profits and you need to book some profits, because if the market comes all the way back against you, then sometimes that can really hurt you psychologically when you've seen that you've been up a certain amount, only for it to come all the way back down and maybe you stop you out at break even or whatever. But yeah, not bad on Friday, but it could have been a really nice run. But I'll still be looking at the Aussie dollar again probably this week. I'm just recording this at nearly 6 o'clock on Sunday evening. So let's go into the market commentary. S&P first of all. I thought I'd have a look at this one. We've got a nice trend channel here that I've put on, going back through most of this year, and so it's possible that we may want to come back down for this trend line now, in the not too distant future. So one for you equity traders, probably well worth having a look at. We've got an 8 and 21 cross to the downside, so yes, we're on the 50-day moving average. We may want to put a bounce in, but we may just start. It may be wanting to work its way down to this lower trend channel line. I haven't done any major analysis as yet on the S&P with regard to where it is, because it has had such a fantastic run. All the markets have. One thing I can bring up, just a slight warning. So if we no, that's not the button I wanted to press, was it? So if we go to comparisons, and then if we put these two in, so we'll put that one in, and we'll put in this one. Okay, so it's a percentage of stocks trading above their. Let's just get rid of that. Trading above their 40-day moving averages first of all. So this is the percentage of stocks trading above their 40-day moving averages. And as you can see from back in May to where we peaked in July, or was it August? Here you're on the weekly charts, beginning of August. You can see that actually this line graph just tells us that actually stocks had peaked, in that they peaked from a breadth perspective back here, because they'd actually got fewer stocks closing above their 40-day moving averages, even though the stock market indices were higher. So it tells us the breadth was waning a little bit there. So we have got that divergence there. I can see. Let's have a look at the 200 as well. Oh yeah, and it's really evident here with the 200-day moving average, 200-week moving average. No, 200-day moving average. That's I've just put it onto a weekly chart. So, so there are these divergences here. They are pretty good. So, that would suggest to me that any bounces are shortable on the S&P futures. So let's take it back to a daily chart. So, bounces are going to be shortable. So if we get any bounces here, then they should be a dead cat bounce for the time being, and that there should be a little bit more off of this yet to work off this this divergence. Right. Okay. Let's have a look at some of the currencies. I can just see them. Which one do I want to look at first? Let's go to the euro dollar first, because I was getting quite bullish on the euro dollar just latter part of the week. We've had a lovely big engulfing candle here on Thursday, and I think it's really just a case of now just seeing where it's going to go to. In that, is it going to gear itself up for a break of this 134 level? So I'm waiting patiently. This was such a big day, this one. I just want to wait patiently for the momentum to kick back in again. At the moment, the momentum's not kicked in, but I'm just talking about Sunday evening, and by Monday morning, for all I know, we could have momentum kicking in, and I'll be getting in on the long side if it comes back up. So I think it's one to watch. It's definitely one, if it does start coming up, to certainly consider for a potential break of that 134. Now, I'm waiting for the momentum to kick in, because at the moment we've got negative momentum, only marginally, but marginal negative momentum on the daily charts. Now, the reason I'm just having a little bit of caution is because of the yen, the dollar yen, that is, because this dollar yen chart, I still quite like this chart with this trend line, and so we've attacked it a good few times, and we keep on sort of rallying, coming down, then coming back up again. And I think if we start to see some strength coming into the yen, then you've got to look at this trend line, which is above 99 at the moment. We're down at 97.50. I think that's definitely got to be a consideration. So if the yen carries on rolling over, great, because that will help the euro push higher. But I think if the yen starts to come up, then we'll probably see weakness come through into the euro. Like I said, the euro at the moment has got negative momentum on the daily charts, even though, let's take us back to the euro, even though it's holding up here on the dailies currently. So it's really going to be a case of which way is it going to go. If we were to come down and break this low down here on the euro dollar, then it probably doesn't even need to come down to that low. I'll take us down to an hourly chart in a minute. That would really be bad news for the bulls on the euro, because when you look at that huge move that we had, if we were to give this back, so I'd say by the time we get back down to 132 60, so this is the hourly chart, so the low of this big breakout bar, I think if we got back down to that low, then it really says to me I really want to get on the short side, because for whatever reason this has not been sustainable. So and also that would therefore mean I'd probably be looking at longs on the dollar yen. So I don't know if that's going to be the case just yet. The euro is holding up here. If we get if we get positive momentum coming through, I want to be on the long side for a break of 134. However, if it starts drifting down, then that really could be a sign that this is actually going to start to properly roll over. This is a false bullish bar here. That's what that would say to us, in which case we really want to be getting on the shorts on swing basis, and therefore on the long side on the dollar yen. Okay, I think I'll leave the analysis at that. Oh yeah, we'll have a quick look at the Aussie dollar. Sorry, I'll leave cable alone. Aussie dollar, we came up to that 50-day moving average, talked about it obviously on Friday's update, and so we're just sort of sitting here. I'd still love to see us come up to this 93, where we keep on, or we did keep on attacking 93 back here. I'd love to see that kick in. Again, we've got positive momentum on the daily charts. So just want to see if it's going to kick back in again on the intraday time frames. And in which case I want to be trying to get on the long side again on that Aussie dollar if I can. So see a bit of strength, I want to be in on that one. That's me for now. Ken will be back in touch on Wednesday.